The CIT reduction will retroactively take effect on July 1st, 2020. The measure also lowers minimum CIT to 1% from July 2020 to June 2023 and taxes on nonprofit hospitals and educational institutions to 1% from 10%. CREATE will also grant 4 to 7 years of income tax holiday and 10 years of 5% special CIT or enhanced deductions to exporters and domestic enterprises deemed critical by the National Economic Development Authority. And in response to the ongoing health crisis, lawmakers included a provision that will exempt the importation of COVID-19 vaccines from VAT and import duties. House Ways and Means Committee Chair Joey Salceda earlier said he expects CREATE to attract 12 trillion pesos in investments over the next decade. Okay, guys, checking in on global equities over in Wall Street overnight. You can actually see the S&P paring back gains, albeit still closing in the green yesterday evening here in the Philippines. That's up by 0.1%. That's after having staged a nice two-day rally there. You can see, however, the Nasdaq pulling back a touch. This comes after, a lot of the tech players had actually released their earnings, and we did see a surge in those shares earlier on, so a little bit of a lower close there. But you've also got things that are being watched over in the United States. Data, for instance, in the United States, economic data showing that companies added more jobs than was forecast over in January. It seems to be that the futures of the Wall Street stocks are in the green as well. You've also got growth when it comes to service providers in the U.S. accelerating. Now, just a quick touch on the virus cases here. We're now topping 104 million cases worldwide. Deaths are now surpassing 2.26 million. On the upside, you've got vaccines being deployed. More than 104 million vaccine shots have now been given worldwide. Now, moving back to Asia Pacific and how we are opening this morning, a little bit on the back foot, at least when it comes to the Nikkei 225, that's down by 0.6%. Over in South Korea, you're seeing the Kospi and Kosdaq also staging some losses at the open. Meanwhile, Singapore seems to be swinging towards the direction of gains. Now, let's see whether or not our index is following suit when it comes to the regional pullback. Recall that we did slide again yesterday, and it does seem to be on that continuing downtrend since that hump day bump. You've got Timson Securities saying that investors have started to book their profits, and this comes on the back of thinner than the average trades we've been seeing. We only had trading of around 9.6 billion pesos yesterday. As I mentioned, softer opening there this morning, just a little above 68.50. Now, let's take a quick peek at our sectors here and which ones are pulling down the bourse. Quite a mixed bag. You've actually got more sectors in the green this morning, but it does appear that holding firms and properties are continuing to be the ones pulling back the index down. This was the same case as yesterday. Holding firms and property firms were the ones that were being exchanged and being sold off. Let's take a quick peek at which ones in particular are the most heavily hit this Thursday morning. SM Prime, so no surprise why the property space is faring really bad. The SM Prime now down by 1.8%. And as I mentioned, the others also basically being holding firms. But take a look at the other bright spots here. Metro Bank seems to be leading that charge. We'll be asking our analyst Manny Ocampo later on why that is. Metro Bank up by 2.7%. Now, meanwhile, Jollibee also in the green this morning. That's up by 0.7%. This as they are opening the first of 3 restaurants of FA 24. Now, recall that they've said that they will be acquiring 60% of Superfoods Group. So Superfoods Group owns Highlands Coffee and FA 24, and they are slated to now open 100 stores this year. They've already started opening 3. So the second one in the country this far has been opened in Ortigas Center. That is, of course, again, owned by JFC. Now, what is FA 24? Basically, they have 24 ingredients that go into the FA, and already had started delivering these as kits during quarantine. That seemed to be going well, and now they're stated to be opening physical stores. So JFC, as I mentioned, trading at 181 pesos this morning. Now, I also wanted to take a quick peek and move over from equities over to fixed income. This, as you know, we're watching very closely the yields on the BSP's term deposits. Now, interestingly, I'm going to pull out that chart for you guys here so you can see how our yield curve is doing. Now, recall that we are, of course, having our interest rates at an all-time low as the Banco Central has continued easing. Now, the yields on the term deposits, these are, of course, short-term facilities of the Banco Central, continue to be going down. And that's despite lower bids on Wednesday. Now, normally, you know, when you have more bids, you've actually got the yields dropping, but now you've got lower bids, so less people actually interested in buying these term deposits, and nevertheless the interest rates are still quite low. Nevertheless, the term facility deposit bids are still higher than the offering, but failing to beat the oversubscription that we saw last week. So you've actually got, if you're going to be buying the 7-day term deposits, the interest rates would range from 1.59% to 1.75%. That's actually still a little bit higher than the band from 1 week ago. Now, recall that the central bank has said that they need to be mopping up this excess liquidity in the financial system, and they need to also guide the interest rates, which are at an all-time low. Now, why does RCBC's chief economist say that the auction results are actually at an all-time low? He said these lower yields are based on positive sentiment. Actually, investors seem to be pricing in the passage of Create, as I mentioned, and that seems to be reducing the risk that seems to be being priced in right now by those lower yields. Now, speaking of interest rates and yields, let's shift our focus now towards our local lenders. Here to chime in, we have with us Manny Ocampo of ICCP. Good morning, Manny, and welcome to the broadcast.
Good morning, Danny. How are you?
Very good, sir. Sir, I hope you know you're ready to talk about these banks, because it does appear that despite the fact that you know the BSP has been very proactive and preemptive in easing, trying to stimulate that loan growth, our lending fell for the first time in 14 years. What is going on here? Was this in any way expected, given the fact that you know we've already had this liquidity circulating in our system?
Yes, the banks have from last year, really taken have gone on if you like have reversed all lending activities. They've clamped down on new loans, for example, to a lot of industries that that were also hit during the pandemic. No? So the banks are they're putting funds right now that they have into government securities, which is why you have treasury bills and treasury bond yields at all-time lows. No? The banks are simply putting them in government securities, and that that seems to support that the data that you have presented, that lending is at an at 14-year low. So that's worrisome for the productive sector of the economy. No? That the banks have suddenly become very conservative in their lending procedures or processes.
Manny, what is it gonna take for this to start picking up? And are you actually envisioning a pickup this year?
Uh, at some point, well, see, these are the things, Danny. No? There seems to be pressure also on BSPs, shall we say, maybe revisiting its low interest policy. Number one, the news also has it that we're at at an all-time high as far as debt to GDP ratio is
Correct.
concerned. So that feeds on that. That is demand for funds, no? And with the vaccinations, with having to support the economy under current conditions, government will continue to borrow to support various sectors. So the demand from government will continue to be there. So that will create, to our minds, and that will create pressure on the interest rate. Inflation is another thing that we need to worry about. Again, I don't think we'll see, interest rates going up,
Mm-hmm.
any meaningful enough. But we probably have seen the lowest of the lows. So it will either stay flat and start creeping up, at least for the next, the coming 2 quarters. This first half of 2021.
Okay, Manny, I'm trying to understand. Is it more beneficial for the banks to be risk averse during this period in order to keep their capitalization afloat, especially with the NPLs going higher, than it is for them to start, lending to the companies that actually need the financing?
For their bottom line, yes,
Yes.
yes. Now,
Okay.
but that's unsustainable. I mean, that is something that, maybe you do for up to this year. Beyond that, they start returning really subpar returns on equity, return on asset to their shareholders. No, so they will have to move into higher, shall we say, higher margin products, and loans will have to be it at the end of the day. So I think the banks are also waiting for the FIST bill to
Mm-hmm.
uh, to be finally, to come into a final form and pass into law, and that should open up. I think the people in the financial sector believe that should maybe make banks a little bit more confident, lending again to the productive sectors of the economy, whether that be property, manufacturing, goods and services, etc. They will have to open up the lending windows again.
Okay, Manny, we're showing at least on television here the NPL ratios, which have basically increased for all the banks comparing third quarter to fourth quarter. You've only got a couple. I think Security Bank, if I'm not mistaken, seems to have decreased the NPL ratio. BPI as well. When you look at these figures, is this in any way worrisome compared to the strength of the total loan book and the ways that the loans are growing? And can you say that we've maxed it out already? So the fourth quarter in 2020 would have already seen the maximum non-performing loans.
We probably will leave that up until the first half of this year, Danny. No, maybe that's when we'll see that our is the worst over. Uh, we'll give it until the first half. I think people are still evaluating loan books and looking to see whether they can take provisionings. So when the banks report their annual income for 2020, you probably will see a lot of banks taking the opportunity to build up loan loss provisions.
Mm-hmm.
So that's to be expected. Then par for the course under the current situation we have now. Um, so FIST, we think, will still provide that impetus for the banks to maybe allow banks to clean up their balance sheets,
Mm-hmm.
and that will have to happen before they start booking new loans in a more substantial way.
Okay, and finally, Manny, still on bag. Sorry that we had to press you on the sector today, but it's a very interesting one to be watching out for. You can see on my terminal here the year to date performance. Again, it's just such a wide spectrum, from PNB down by 11.4% and BPI actually in the green. Can you give a little bit more nuance on which ones you're more positive about and why that would be the differentiating or discriminating factor?
Well, the banks that have done loan loss provisions early on, shall we say, now would should come back to recover a lot faster. If you'd like, they bit the bullet already. So you have guys like BPI. BDO was also ahead on that one. Metro Bank they did the same thing, but the question on whether enough is enough. I mean, that's one more thing. No? So, um, you know, we're waiting for further news. If there are big blow-ups again, like what
Mhm.
we had last year, will how that will affect the banking sector in general. So these are the things that you're watching out for, the big blow-ups, and I guess banks have a lot. We know that a lot of banks have set up provisions there. Now,
Mhm.
um, some of the banks are going to have to play catch up, and that will maybe continue to affect earnings for the first half of 2021. But beyond that, and again, with hopefully FIST coming into law, the banks should be in better place. Now, just to
Mhm.
bring things into perspective, also. Um, the NPL to capital ratios of the banks are very low. No? When you talk about NPL rates, yes, they're growing. NPLs are growing, but in relation to the capital that the banks have really built up over the past couple
Mhm.
of years. No? You've seen banks do major capital raising, or over the past couple of years. That bulletproofs, shall we say,
Okay.
in a way, their balance sheets, and being able to take these shocks. No, so will we see the banks or the whole banking system in trouble anytime soon? We don't think so.
Okay, so still fundamentally sound, just a matter of some, supportive regulation there, consumption as well, and of course those preemptive provisions as well
Right.
as we move over to 2021. Thank you so much for those insights. That was, of course, Manny Ocampo of ICCP.
Thank you.
Okay, guys, checking in on the headlines we're keeping our eyes on. ADB and Thinking Machines Data Science found that digital inequality is still apparent between rich and poor cities in the Philippines. For one, nearly 1 million Filipinos in rural areas still do not have access to digital connections, as most cell towers are located in wealthier cities. In fact, less than 10% of Filipinos in poor areas live within 500 meters from a cell tower. The study found that this leaves almost 850,000 Filipinos beyond the scope of cell site serviceability. Moreover, cities with high wealth levels typically have higher internet speeds as compared with poor cities. Residents of the 5 wealthiest cities in the country enjoy an average fixed broadband download speed of 25 megabits per second, while those in the 5 poorest cities only experience an average of 4.6 Mbps. The authors of the study said the insufficiency of digital infrastructure in the country is a result of multiple factors, including stringent restrictions in the telco market, leading to a lack of competition and high barriers to entry. The Internal Revenue Bureau is aiming to increase excise tax revenues by 13% this year. That's as it expects economic activity to pick up if restrictions are further eased. The BIR set an over 332 billion pesos excise tax collections from tobacco products, that's as well as alcoholic and sweetened beverages. Excise tax collections are expected to make up 16% of the Bureau's total collection target this year. Recall that excise tax collected from large taxpayers slumped by 7% last year due to strict lockdown measures and an economic slowdown. The Energy Department says 2 of its units are working on providing backup power for COVID-19 vaccine storage and administration facilities. In a statement, the DOE said their Electric Power Industry Management Bureau and the Task Force on Energy Resiliency are looking at 3 levels of power supply for vaccine facilities. The first line of defense against possible power outage would be the NGCP. The next are the distribution utilities, and the final backup would be the generators provided by the facilities themselves or the LGUs. A similar system was supposedly used during the hosting of the 2019 Southeast Asian Games. Energy Secretary Alfonso Cusi added that the department will put the entire industry on standby to play a backup role in the vaccine rollout. And that's a first look into the business day. Today is Thursday, February 4th, 2021. Catch Business World live for the market close. At 3:15 p.m. today. I'm Danny Laurel, and we are One News.